So now that we've put in the bills for the week, let's go over to the invoices. There's just a couple. And the first one is for Dynamite, and it's just a job deposit. So let's go ahead and put that one in now together. So we're going to go New Invoice, Dynamite. It's not there yet, so let's go ahead and add them. Save. And invoice number 1022, it just populated the next one. And the date is June 25th, right there. And this was for just the job deposit. We've discussed this before for $200. So that's out of scope. And I'm just going to go ahead and hit save, because then that receive payment pops up. And let's take a look. We can see that it was paid by check on June 25th. So let's go ahead and receive payment. Dynamite is filled in because I said receive payment right from their invoice. And it was a check. It goes to undeposited funds on June 25th. Save and close. Excellent. So let's see what's next. We have one more invoice. We'll open that up. So this one is for Joe King, and it is Joe using the job deposit that they paid on a garden installation and design. And it doesn't actually say here when that job deposit was received, but we can go ahead and confirm that by closing out of the invoices. We'll go to customers, go to Joe King. And here we can see that on June 15th or June 16th is when the deposit was paid. So I'm going to reference the June 15th invoice date here. And let's go ahead and say, see how I'm in Joe's customer screen? Now if I go new transaction, I just don't have to type Joe when I go to do the invoice. So let's pull the other one up here. This is Joe King's. And that was, 1023. This was June 28th. And first of all was that garden design and installation. And that was for $1,700 plus HST. And then they're using their job deposit that was received on June 15th. And that's minus 200. We could have said -1 for a positive 200, but it's definitely out of scope. And we can see 1721, 1721. And what is the payment information on this one? Paid by Square on June 30th. So let's hit save. And there's the received payment. Joe King on June 30th. We'll say it was a Square payment. Deposit to Square Clearing like this, and we will go save and close. So those are the two invoices that were in the folder, and if we go next to deposits, it is empty. So that is done. We don't need to do anything there. And when we go to the payroll folder, we have one paycheck. Let's take a look at this paycheck. Now, this paycheck has a few things going on. We can see that Kamal got a raise to $21 an hour. And we can also see that they repaid their advance. So we're going to get to see how QBO Payroll handles these different things. As I mentioned before, the way that their accrued vacation pay works, if there's a raise or overtime worked, it really messes that up. So we're going to need to adjust the accrued hours. I have it in quotes because vacation time off is not like an accrued hour thing. And also we'll have to do the repay advance, and we'll see how that plays out in QuickBooks as well. So let's go ahead and run this payroll together. So we're going to go to payroll, employees, and let's go ahead and increase the hourly rate. So before we put Kamal's raise in, I just want to do a quick little bit of math. So if their hourly rate is $19.50 and their accrued vacation pay is $144.46, translating that to hours, and again, like vacation pay earned and vacation time off. They don't equal. So translating this to hours is how, in quotation marks, is how I'm saying it. So if we say equals the vacation pay accrued divided by the hourly rate, what would the hours be if we translated that amount into hours? That is 7.408, so 7.41. Excellent. But of course, that's only right because a couple of weeks ago, we fixed it after he worked overtime. So that's why it's right. And now I'm going to show you how it gets skewed when we do a raise. So let's go ahead and put the raise in. So I'm clicking on his employee line, his employee information. And we're going to go to the base pay or the pay section. And we're just going to go ahead and update this to $21 an hour, like this, and effective today. And I'm also going to go to notes, and I'm going to add a note, and I'm going to say raise from 1950 to 21 on June 27th. 2025, like that. Just because I don't know where there is a history of the changes of rates of pay. So it might be there and I haven't come across it yet, but I've just gone ahead and put that note there. And before we actually go and run the pay run, we do have to add that employee advance repayment. So we'll come down and we'll go to deductions and contributions, edit, add a deduction/contribution, and we're going to select other deductions. And right here, that's where you can see the cash advance repayment that we looked at before. And I'm just going to call this advance repayment. And again, I noted before that we couldn't just save it with a zero amount. We had to say 250. And I'm going to go ahead and hit save. So one other thing that I'm going to do before we run the payroll is I'm going to take us back to when we were doing the bills folder. And if you remember, there were two receipts in here that were e-transferred as a reimbursement. Here's the Dollarama one, and it was $70.40, and we noted that Kamal was reimbursed by e-transfer because we used that expense report method of putting that into the bookkeeping. It was both for the Dollarama and it was also for the Shoppers Drug Mart receipt that was emailed. And if you add those two numbers together, it was $82.82, and so we made it a bill payment to Kamal Ahmad expense report bill. And that, like I said, is the best method for putting it in to track sort of who was e-transferred and listing out the details of the receipts that were reimbursed. But some people like to use the reimbursement option within the QBO Payroll, and I'm going to illustrate why that is actually more work than it's worth and a bit of a pain in the butt. So to do that, people set up a pay type called reimbursement. And if you try to do that from this screen in Kamal's page, you can see that reimbursement actually isn't an option in this drop-down list. And if we were to drop down here and select reimbursement, that's just a filter. And we can see that we don't have that pay type option right now. So we're going to say add, and then from here we can say check your payroll items. So we're going to go to the payroll items, and we can see that under the pay types there's no reimbursement, but we can add a new payroll item, a new pay type, and here is where we can say that it is a reimbursement. We can see there's no advance option to pay out, and that was something that I had mentioned that I was frustrated with before, but we can pay out a reimbursement, and we're just going to call this reimbursement, like this. I'm going to hit create, and now that we've created reimbursements, we can assign Kamal Ahmad, next, And it's not a reoccurring amount. It just happens whenever he needs to get sent reimbursement for things. And we can leave that one at 0. So we can go ahead, close this, close this, close this, and now we are back. And I still don't actually see it right here on additional pay types. What if we refresh this screen? Will it now be there? So let's go down. And now the reimbursement shows up. So just needed a bit of refresh there. So let's go ahead and run the pay a couple of times, showing you a few different things. So we're going to go ahead to the employee list. There we can run the payroll. And this payroll is for the 8th to the 21st. And it's paid. Let's make sure that I have that correct. So yep, 8th to the 21st. And then the pay date is the 27th. So let's go ahead and put this in. The regular pay was 41 hours. There was no overtime, vacation, or stat, but there was that 8282. Now that's not actually in the case study here right now. Only the repay advances in this section. But I'm just illustrating if we had reimbursed him 8282 from his paycheck instead of with that e-transfer, sort of how it's extra work for us in the long run. So we're going to come over here. Now, there's nowhere on here yet to talk about that repay advance. But if you remember, we said every check, like we said, it's going to be 250 every check. That's what we were forced to say when we set that up. And if I go ahead right now and click Preview Payroll, now I can click into this Spyglass Details option, and scrolling down, there's that reimbursement, but here is that advance repayment. So it's automatically applied it for us without us having all that control sort of at the front. And so if we don't remember to take it off before the next pay, it's just going to keep doing it. And you can imagine the fun that is when the employee gets more money taken off of them than they were expecting. So another drawback that I find with the QBO payroll. And I'm just going to delete this 8282 for a moment, just so you can see that 395.94 does match what the actual case study is saying, 395.94. But first of all, let's illustrate what that 8282 reimbursement is going to do, like that. So I'm going to go save. And so let's go ahead and submit this payroll. And now I'm going to show you where that reimbursement has landed. So we're going to go to Reports, Profit and Loss, and I'm just going to make this the from and to cover June. So that's June 1st to June 30th. And right here, we can see that the reimbursements is now like an expense item on the profit and loss. And what we would have to do then is now we have to move it from reimbursements somewhere else. So you can imagine if we hadn't put in what the actual expenses were on that supply, on the supplies, on the shopper's receipt, and on the Dollarama receipt, we would actually just, first of all, it'd just be going to reimbursements expense, which, like, what is that? Reimbursements for what? Vehicle gas, cost of goods sold, like it's too vague. And we would miss the HST. So there's no HST credits in there. So if we didn't put in that reimbursement the expense report way with a bill and a bill payment, you can see that it's just this vague expense that doesn't mean anything, missing the HST ITCs. So if you do have like direct deposit set up with QBO Payroll and you're like, well, I really just want to be able to give that money back to the employee through his paycheck, that's fine. You can see it's doable, but now we've got more work, right? We've got to move that 8282 over to its correct expense account, which in our case was supplies with HST. And we'd have to like sort of note that it was Shoppers and Dollarama just to be able to keep those crumbs. So he could say sort of like, did you ever reimburse me for that? Or what is that 8282 for? And then we might even have the date wrong, right? Like maybe the date was in like May and it just took a month to reimburse him, or maybe his paycheck was like, June 2nd and the receipt was like May 22nd or something like that. Like, you can see that it just is messy and extra thinking, and I don't really love how it works. Another option is to use that like expense report bill and actually decrease reimbursements with it. And I can show you what that looks like. So if we went 8282 and we went to this bill for Kamal Ahmad expense report, and if we had instead put it actually in as an expense, right, we could actually go here, reimbursement, and then say minus 8282 out of scope. And you can see how that is now making this like a zero sum bill, or we would put it in as an expense. I'm going to go save and close. And because this is dated, cancel, because this is dated June, then it works. Yes, we'll go back and fix it. And it's going to repopulate this report. And now we can see that reimbursements is now 0. But that is only because both the expense report, where we want the supplies expense to go up and the HST credits to go up elsewhere on the profit and loss, is the same month as the paycheck. So here's that bill where we said negative reimbursement for 8282, and there he is getting paid out of the paycheck for 8282. So it does net to 0, but like I just feel like it adds all of this complexity, like especially with the timing. If it was May, or I don't know, like this is doable, you can see, but it's extra work. I don't really like it. And the timing difference can make this reimbursement account really kind of get more complicated than it needs to be, especially because it's on the profit and loss. Like, in my head, a reimbursement is kind of like the same as a cash advance. Like, it's nothing to do with like expenses. It's to do with, I need to reimburse my employee some money. So to me, that reimbursement account should be on the balance sheet, not reflecting on the profit and loss, because we already have, when we put in this bill, the supplies and the HST. So here we go. If we go over to supplies and click that, and just to see the detail, there's where those lines are from that bill that we put in for Kamal Ahmad expense report. And here's that lovely detail, $M on this date, shoppers on this date, and supplies is getting hit up, and the HST is also going to be hit up on this date. So because we put in the expenses using a bill or an expense like this, to see this reimbursements also on the profit and loss makes no sense. Now, I have in the past gone into the payroll settings. So I'd go here and I would go payroll settings, and I can change that reimbursement GL account to be on the balance sheet. I did that once, but because it's a QBO generated GL account, the next time I did reimbursements, it just made a new one called reimbursements -1 and put it back on the profit and loss again. So it was like, that was frustrating to me as well. So to continue on the things that frustrate me about QBO Payroll, let's go see what happened with that advance. At least that is on the balance sheet. So we're going to go back to reports, standard reports. We're going to go to the balance sheet, and we're going to make the date June. So here we are with the June balance sheet, and we'll come down, and you can see what happened here is QBO created another GL account, and they called it Advance Repayment. So under the repayment, there's the advance that they created so that we could issue the advance out to the employee. And then when we had to create a specific deduction on the payroll, it created a second GL account called Advance Repayment. So I don't love that there are two GL accounts to sort of track one thing, but I'll begrudgingly accept that they are actually two sub-accounts under repayment, and you can shrink that up, and you can see that the repayment does total the 0. We could go and change the check that we issued to go to advance repayment instead of advance. That's another option if we choose. And what we can do is if you click on this 0, the total for the parent account is 0. If we were to click on that, the way that QBO brings it up is you can see all of the transactions sort of for advance and all for repayment. And we could change the group by. So instead of grouping by the sub-accounts, we can just say account name without the sub-account name. So you can select that. And now you can see it sort of mushed it together in one list. So if I were to make this a bit wider, I'd still have to scroll over. We could sort of get rid of some of the columns here to make it all fit on one screen, but you can see at the beginning of the week, we issued Kamal 250 in an advance, and then this week we've also deducted it from his paycheck. But we're not done yet with the advance. So to summarize so far, we cannot issue an advance or pay money in advance to an employee through QBO Payroll. We cannot do that. Even here on QBO's help support, when it says pay your employees in advance for online payroll, you can see you can't. It doesn't say you can't, it says do it this way instead. But basically, you can't. But with QBO Payroll, you can accept the repayment of the advance by setting up that advanced repayment deduction on the employee's payroll profile. The drawback of this is that advanced repayment deduction is one of the generic ones. We can't tailor it, so it just keeps doing it until we take it off. Like it's do this deduction every paycheck. So that's the next step that we need to do right now. We need to go back to the employee profile and delete that reoccurring every check 250 advance repayment. So let's expand this out. We'll go back to payroll. We'll go back to Kamal's profile. We'll scroll on down to those quote unquote deductions, edit. And here is where we can delete the deduction. Now, before I delete it, I am just going to go into edit here and just note, you might have seen that there was that annual maximum option, right? You thought, Naomi, what if we had put 250 in the annual maximum so it just deducts it once and then stops? Well, in the name annual maximum, you can see that wouldn't work because once January rolled over again, it would just start like deducting the 250 a check again until it got to that annual maximum. And I mean, like it could be theoretically useful if he was paying it back, over 5 pay periods until it reached 250. But again, like what if those 5 pay periods like spanned over December to January? Then it's going to restart that count up to 250 again. So this is just another example of QBO creating like a sort of workaround solution instead of actually programming in like a user-friendly employee advance option into their QBO payroll. So what we're going to do is we're going to use their workaround option and we're going to cancel and just delete this now that 250 has been deducted from Kamal's paycheck so that QBO Payroll doesn't continue to deduct that 250 every check deduction that we set up on every single paycheck moving forward. So we're almost done here with the payroll aspect of this week's case study, but I've got a couple more things to do. So first of all, I'm scrolling up and I'm going to paycheck list, and you might have to change that filter. Its default can sometimes not show you everything that you need to see. And we're going to go to this June 27th, and I can click on it and I can see it. It doesn't feel editable, but if I drop this down, here is where I can select edit, and I'm going to just delete that reimbursement. I was just using that to sort of illustrate what the reimbursement GL account is on the profit and loss and how it's extra work and how I prefer that expense report bill method. So we can save that. And while I'm thinking about it, I'm just going to this other tab and I'm going to go 8282. just while I'm thinking about it, go to this bill, and I'm just going to delete that. That was me just illustrating things. And I can go ahead and hit save. I'm going to go ahead and make payment because this payment got unapplied because the bill turned to 0. Now I'm going to open this unapplied payment up, check off the bill, make sure they're paired together, save and close. So that was just, that's not part of you doing the case study. That was me just illustrating something and cleaning it up. So back over here on Kamal's pay, the last thing that I wanted to talk about was now that he has had a raise, you can see that QBO's vacation hours is out of whack and we're going to have to fix it. So let's go back to the employee list and I'm going to bring back over the calculator that we had done at the beginning. So if the hourly rate is $21 an hour and the vacation pay accrued, which is, I've only ever seen this be correct, so I trust it. It's always worked out. $178.90, that's 4% of the earnings, okay? What is that translated to hours? So equals this amount divided by the hourly rate. It should be how much? It should be 8.52. It should be 8.52, and we can see that it's not. It's 9.05. So the situation is when somebody worked overtime, if the QBO payroll user was guided by only the hours when they went to run payroll, they would have underpaid how much the employee was legitimately owed for their vacation pay, because QBO guides you to use those hours when you run the paycheck. And in the case of a raise, you can see it goes the other way. It goes to the fact that now we're going to be giving out more. So now the employee's happy, but that's not like what the employer wants, giving out more than they should be giving out to the employee. Now it doesn't feel like a lot, like 8.5 to 9, but that's half an hour. That's half an hour. That's $10. I know this is a small example, but ramp this up to longer hours, longer time scales, higher rates of pay. And also it's now going to be if somebody is guided to pay out the 9.05 hours, you're going to see that this accrued earnings gets out of whack. So even the balance sheet is wrong because QBO is putting that accrued vacation pay payable on the balance sheet. It just messes everything up. Let me go ahead and pull this over to show you. If we were to run payroll right now for Kamal, and we wanted to pay out vacation pay, you can see it's telling you there's 9 hours. It's not giving you the value of vacation pay earned. It's translating it into hours, which again, they're not equated. So if we were to say, oh, okay, let's just pay him out the 9 hours that it says he has there, you can see if I go ahead, preview payroll, submit payroll, like this, and we go back to that employee list, now it's got a negative amount. So, and 5.5 hours is there. It's ugly, it's gross. So let me go ahead and fix that, delete that one that I just did. I'm gonna go here and I'm just gonna delete this like that, delete, because it was just me showing you an example of how it's not working. We're gonna go back to the employees, and I'm going to show you how, if you're using QBO payroll, every time an employee either works overtime or gets a raise, you're going to have to fix this available vacation. Let's remind ourselves how we do that. So what QBO says is 9.05 hours, and what it should be is equals 9.05 minus 8.52. And that is 0.53 difference. So we need to reduce the hours available by 0.53. So I'm going to click into the employee's profile. I'm going to come down to the time off, and I'm going to make adjustments to the available vacation hours to match the available vacation balance. And so we want it to actually go down this time by 0.53. And we're not going to change the accrued amount. The amount, as I said, it's always been 4% of earnings, which is correct. That's the one we want to trust and follow. We're going to hit save. And now you can see that the available vacation hours are 8.52. Because we changed those hours and not the vacation pay balance, it didn't change the GL, the profit and loss, or anything. It's just something that I think, even if there's a note, even if there's just a pop-up that says, like, you need to adjust it because they've got a raise or they worked overtime. I don't know what the solution is. I just know that QBO needs to unhitch the available hours away from the vacation pay earned. So that now is all that I wanted to do with this one piece of paper here in the case study, showing what happens when you get a raise and how to fix it, and then what that repay advance, like how that all sort of played out in QBO Payroll. Of course, if you were doing payroll manually and putting them in individually, like we did at the very beginning when payroll started, I showed how to do it without using QBO Payroll. You would just use employee advances on the balance sheet and not have to worry about any of the stuff that I just talked about with QBO Payroll. Let's see what is next in the folder. We're no longer in bills. We were just doing payroll. We go next to statements and we see there are none, but of course we're not done yet. Next, we get to clear the bank feed. And this June week number 4 has a couple of interesting things.